Asian stocks were hammered today, and European shares are in the red as well. This follows a sharp sell-off on Wall Street overnight. The Dow fell more than 800 points last night, and U.S. futures markets are pointing to another night of selling today. The Dow contract currently down 226 points. Here in Asia, major indices finished down 3, 4, 5, even 6%. Joining me now to make sense of it all is Jameel Ahmad. He is the global head of currency trading and market research at FXTM. Jameel, I think there are two questions on every investor's mind. First, why now? And second, do I buy or sell? Let's start with that first one. What changed in the world of investing, in the world of trading, that triggered this global wave of selling?
Thank you very much for having me. It's a very good question because there isn't an exact individual catalyst that we can say is behind this sudden momentum. What we can say is that it's been for a long time said that stock markets look very overstretched in valuations. So we could say it's profit taking. However, then we can look at the news flow, and there's been quite a lot of negative news for stock markets over the past 1 to 2 trading weeks, without mentioning the ongoing external uncertainties around trade. But we won't talk about this now. What we will talk about is the move higher in U.S. Treasury yields. There's a lot of optimism over unexpected moves higher in U.S. interest rate policy because the Federal Reserve Chair, Jerome Powell, seems very optimistic, which might have spooked investors. On the other side, you now have President Trump is becoming more and more often talking about U.S. interest rate policy. He made more comments overnight around the Fed being crazy or something, which might have spooked investors. And then you've got this major IMF conference that's currently going on in Bali, which has highlighted a lot of risks around the global economy, around global markets. This might have tempted investors in reference towards whether it's a buy or sell. Generally speaking, stock markets have recovered from previous rounds of selling. This is the biggest market sell-off since February, but it did recover then. So let's not say history won't repeat itself. However, I must stress there's a lot of external uncertainties around the global markets, and probably it's about time for stock markets to enter a correction.
Well, I think it's interesting that you bring up that sell-off in February because that really wasn't that long ago. And if we look at U.S. stocks for the course of the year, they're still doing amazingly well. You also mentioned bond yields, and, that is a factor that's been cited in this global sell-off, rising bond yields, fear of the impact of higher interest rates. But if we look at the yield on the benchmark 10-year Treasury now, it's actually coming off its recent highs. Currently, it's paying 3.16%. Just yesterday, day before, was 3.25%. Is this just a pause in the higher interest rate, higher bond yield story?
Yeah, because if we look at when the 10-year Treasury yield first went above 3%, which was seen as a massive milestone level, that actually came around April, May time. It might have even been March, so we're talking Q1. So it took a long time to move from 3% towards its highest level since 2011, which happened earlier this week. I can't actually remember the right digit. So it's been a gradual move higher in U.S. Treasury yields. However, we can say this has probably been impacted by U.S. interest rate optimism. There's a lot of concerns because the Federal Reserve are being more and more optimistic, both in terms of their comments on U.S. interest rate policy and also optimistic on U.S. economic growth. And obviously, the U.S. economic data is firing on all cylinders right now. You have to be very pessimistic or point out a very particular fact, whether it might be wage growth or U.S. inflation, because other than that, U.S. economy is roaring at a time where there's a lot of concerns over Brexit, United Kingdom. We've got the European Central Bank and the Italian fiasco that's still going on. EU economic momentum isn't quite doing as well as it should. But on the other side, the Federal Reserve and the U.S. economy are doing very well, and this has probably driven some of the moves as well.
Well, there have been all these factors going on for months now, really most of this year. It's been like a tale of two markets. On the one hand, you have these negative factors, rising interest rates, trade tensions, geopolitical tensions, more recently add to that higher oil prices. And then you have the story of a strong U.S. economy and good corporate profits. We're entering the earnings season in the U.S. now. What are you expecting? Do you think that news of U.S. earnings will help to stem these losses or perhaps even spark a new rally?
To be honest, I wouldn't say it's U.S. earnings seasons that we have to look out for as to what's coming out next. I would look at the U.S. midterm elections, which are 1 month from now, actually just less than 1 month, and this isn't the right time for a U.S. stock market sell-off because you've got an election around the corner. But moving back to earnings, we would probably look out to see whether the tax stimulus or any of the other reforms that the Trump administration has brought in has had the continued impact on earnings that we were expecting. But I would still also I can't underestimate this enough. You have to continue to monitor these external uncertainties around political risk, around trade tensions, because they are completely very difficult to predict. They're actually unpredictable. You cannot predict the Trump administration. You can't predict what might happen with the trade tensions next. And this is the catalyst that can inspire the next sudden move. So whether it could be a buyer move or a selling move.
We're speaking with Jameel Ahmad. He's the global head of currency strategy and market research at FXTM. Speaking about buying or selling, I will return to a question that I posed at the beginning of this interview, which is, as an investor right now with everything going on, do I buy or do I sell? What advice are you giving to your clients?
I can't provide investment advice as such, but I can say is that I'm concerned about the ongoing nature of the external uncertainties. Many of those similar ones to what have been highlighted from the IMF over the past couple of days, which is emerging market stresses. You've got the trade uncertainties, the indications that global growth has possibly plateaued, which I think is very concerning. So I would more be around the selling side over the near term. But I do admit that when stock markets sell off, they generally bounce back over the longer term. So let's see what happens with the external uncertainties.
So when you say you'd be on the selling side, does that hold for Asian markets as well as the U.S.?
Yeah, globally. Whatever happens with Wall Street, what trickles down to Asian markets, it trickles down to other markets as well. It is the Wall Street sell-off that has impacted the Asian markets today.
All right. Well, we've been focusing on stocks so far, but you're a currency strategist. How are currencies being affected by the equity sell-off and by what we're seeing happening with bond yields?
It's interesting, actually, because we haven't seen that much of an impact yet. But interestingly, we do see some profit taking starting on the US dollar, which has led to some unwinding on Euro USD positions, so the euro strengthening. And of course, the most normal move in times of unforeseen market volatility, we've got a broadly stronger Japanese yen. The Japanese yen is on track for probably its sixth successive day of gains against the US dollar. If this market sell-off does continue, we would look to see what impact this has on safe haven instruments. So you're looking at gold and the Japanese yen as two of the most popular instruments for investors to seek in very uncertain times.
Yeah, you mentioned that investors like to put their money in yen when things are uncertain. And traditionally in gold, but gold has been weak all year despite all the uncertainties surrounding us. Where do you see gold heading?
Well, actually, over the near term, gold is edging higher. I'm just looking at my charts now. Gold is actually higher by $20 over the past 3 trading days, with around $10 or so of that move coming over the past 24 hours and specifically trading today. Yes, this is actually a very small move when you consider that gold has lost $100 or so far in 2018, perhaps more. But what we would look out for now is whether the dollar continues to act as a safe haven investment with different market volatility, because the dollar was initially gaining on trade uncertainties because it was thought that if there is a trade war, that the U.S. economy would be less impacted than other economies that the Trump administration might be targeting. That's why gold was trading lower, because of dollar strength. Because the dollar does look like it's trading lower, at least over the near term, this is seen as positive for gold today and maybe up until the end of the week at least.
All right, Jameel, thank you so much for sharing your insights with us. We've been speaking with Jameel Ahmad. He is the global head of currency strategy and market research at FXTM.